Hello and welcome to the Mortgage Porter Weekly. I'm Rhonda Porter, mortgage advisor in the greater Seattle area, and thanks for joining me the week of April 13th, 2026. Last week, we got a double dose of inflation data. The headliner was March's Consumer Price Index, and overall prices rose 0.9% for the month, a notable jump, largely driven by the higher energy costs tied to the ongoing conflict in Iran. When you strip out food and energy, though, core CPI was much more moderate, up just 0.2% for the month and running at 2.6% annually. We also got February's PCE, that's the Personal Consumption Expenditures Index, and that's the Fed's preferred measure of inflation. It showed broad-based price increases, which was a bit of a surprise given that it covers a period before the oil spike that we saw in March. On the jobs front, March came in much stronger than expected. The government's BLS jobs report showed over 178,000 jobs added, which was well above the 60,000 that were expected. The unemployment rate ticked down slightly from 4.4 to 4.3%, and that said, continued claims remain elevated, which suggests that some workers are seeing benefits expire while still looking for full-time work. And we'll see if there's any revisions done to this report in the upcoming months, which would not be unusual. For housing, the outlook is encouraging. Cotality is now projecting home values to rise about 4.7% over the next year. That's up from their earlier 4.4% forecast. And to put that into perspective, on a $500,000 home, that's roughly $25,000 in equity growth in a year. Now let's talk rates. According to the Optimal Blue Index, the average 30-year fixed rate as of last Friday, April 10th, was 6.267%. That's a slight improvement from the week before. And a quick note on what this number means. The Optimal Blue Index reflects about 35% of mortgage transactions nationwide. And this is specifically lenders who use their platform when they go into lock a rate. It's a useful benchmark for tracking trends, but it's not a rate that you can lock in today. Your actual rate will depend on your credit score, loan to value ratio, loan amount, property type, and a handful of other characters. So this is just to give us an idea of what trends are. And if you want to get an actual rate quote that's current and based off of your personal scenario, please reach out to me. And here's what we have on the calendar this week. Monday, we have the existing home sales. Tuesday brings us the ADP employment report, which is their weekly report, and producer price index. Wednesday is the NAHB housing market index and the Fed's beige book. Thursday is jobless claims, and keep in mind that the next FOMC rate decision is April 29th, and no change is expected. And I'll be honest, as important as all these reports are, they do take a back seat to the bigger story, which is the Iran war and what's happening with oil prices. And that geopolitical backdrop has been the primary driver of rates volatility lately, and we got to keep an eye on it. Hopefully it's over soon. It's just before 11 a.m. Pacific time. As I prepare this for you, mortgage-backed securities are pretty flat. We're up about 8 basis points, and oil prices are up sharply after the weekend talks between the U.S. and Iran failed to produce any progress. And when oil spikes, inflation concerns rise, and that tends to put upward pressure on mortgage rates and through the bond market. So we're watching this closely. No dramatic moves in rates so far today, but the situation is fluid. This week, I want to feature a first lien HELOC that is sometimes called an offset mortgage. And it's very popular in the UK and other parts of the world. Instead of a traditional mortgage, this program links your home loan directly to a checking account. So the mortgage is kind of 3 things in one. It's your first lien mortgage, a HELOC, and also your checking account. Deposits into that account offset your loan balance when it comes to interest calculation purposes. So the more money that you keep in your checking account, the less interest you're going to be accruing every single day. What makes it really interesting is the sweep feature. So at the end of each day, any funds in your linked checking account are automatically swept against your loan balance, and the mortgage is reamortized. When you need to spend money and you need to take a draw, you have your account there to cover it. So you always have access to your home equity. Your deposits and your income works for you the moment it hits the account. So it's really a great concept, different from a traditional 30-year mortgage. With your 30-year mortgage, traditionally your payments are fixed and set, and you can make additional payments towards principal, but really everything's pretty much scheduled out. And with this type of a program, you have a lot more control and flexibility with paying down your mortgage faster and also having access to your equity when you need it. So this program is a great fit for self-employed borrowers, retirees, or those getting ready to retire, investors, or any homeowner who wants more control over the interest they pay and who want to have access to their home equity. So I do have more information on my blog, so please reach out to me if you'd have any questions or would like to learn more about this. So coming up on April 29th from noon to 1, we will have our final class in our Homebuyer Workshop series. This one's going to be on from offer accepted to closing day, and we're going to walk through everything that happens after your offer is accepted and the timeline, the people involved, some things that you're going to want to avoid, and what closing day actually looks like. So this does take place all in 60 minutes. It's live. I'll be there to answer your questions. And like I said, this is the final class in the series. It's completely free, and so I hope you can sign up or share it with other people that you know that are buying homes in Washington State. And if you've missed the previous classes too, I do have them all online and available for you to check out. Thanks so much for watching. If you have questions about your specific situation, whether you're buying, refinancing, or just trying to figure out your options, I'd love to hear from you. So please visit me at mortgageporter.com or reach out to me directly. I'm always happy to help. See you next week.